Well, in an unusual move, the founder of Patagonia has given away the company, transferring ownership to two nonprofits establishing to fight climate change. And joining me now is Dr. Olaf Groth, professor at UC Berkeley's Haas School of Business. So I think a lot of people were surprised by this move. So why is this such a meaningful move?
Good morning, Ryan. Always good to be with you. It's a great move for climate change, frankly, a big signal, right? That's like a $3 billion dedication of funds to climate change. And frankly, without any tax benefits to the owner's family, not that that would have been such a bad thing, because we need all the possible incentives we can get to dedicate more funds, more corporate funds to climate change solutions. But really, it is pulling into question our current paradigm of how we generate those solutions, where we get the capital, right? The owners had the opportunity of going public with this company or selling it to somebody else. But really, are public markets going to get the job done in dedicating major corporate resources to climate change solutions, business being the most effective and efficient way of doing so? So big questions here on this. And, frankly, now, of course, there are other strategy questions for the company as well, right? So now that the owners are stepping back, will management still run the company, in their service, as it were, or with the same purpose? There are strategic questions on the horizon, right? Patagonia is a premium brand, higher price brand. How is that going to hold up in inflation times, et cetera, et cetera? So on a strategy level for the company, also some big questions ahead.
Yeah. So my question about that, is it sustainable for them?
Well, so, the owner family has essentially put the voting shares for the company into a trust, a purpose trust, and that is controlled by the family and some of their confidants and trusted advisors. So on a high level, the purpose should stay in place. But, on an operational level, management will need to make decisions day to day, and some of these may or may not be aligned with the original founder's purpose, right? Not every management decision will go to a board for voting. And so there may be a bit of a disconnect there between the high-level strategy and the actual operations. But in theory, this vehicle should allow the family to at least maintain the overall direction of dedication to the environment and to climate change.
Yeah, a lot of people will be watching that. In other business news, the unions and rail companies came to a tentative agreement yesterday, calling off that potential strike. So how does this impact us here in California?
Yeah, that's a big one, Ryan. We averted yet another catastrophic blow to our economy with that one. Just imagine 7,000 trains idling, about $2 billion of damage daily to our economy. You would have had to muster up about 460,000 trucks and 80,000 additional drivers in order to compensate for that. So major catastrophe avoided here for the economy that's already struggling, of course, with inflationary pressures. For California, this is significant because just imagine many of those trains, of course, going to our ports for imports and exports, picking up or dropping off goods, right? Los Angeles area alone is responsible for some $380 billion of annual trade in goods. And so all of that would have been backlogged yet again. And so we too here in California can breathe a big sigh of relief here that this didn't go through.
All right. In the world of cryptocurrency, not a good year for them. And so what is going on with Ether's merger, and why is this such a big deal in the crypto world? A lot of people talking about this.
Yeah, this is a big deal because Ether is, of course, the backbone for some, 550 decentralized finance applications. Some $33 billion of Ether are staked on Ethereum, the blockchain layer underlaying it. And so if this hadn't gone right, a lot of people would have potentially lost a lot of money and had a lot of service interruption. So that's number one. But really, there are a number of different aspects to this. So number one, the switch from proof of work to proof of stake type mechanisms for validating transactions in these blockchains will yield a 99.9% improvement on energy consumption. That's about 0.2% annual energy savings globally. That's about the same as switching off a country like Chile or Portugal. And so big deal for the environment, again, for energy consumption in difficult energy times as it is, and certainly climate change times. The other one to watch here is the fact that with this change, Ethereum's capacity for transactions will increase, and therefore it might once and for all outcompete Bitcoin's mechanism for those types of transactions. And then there are some other considerations like, will this drive further centralization in the crypto world? As you know, crypto was invented as a decentralization mechanism, but currently 4 big exchanges are holding about 60% of all Ether staked. And so many people are saying we got to watch that because these companies might be even more weighty and more powerful going forward, right? And so those are probably the big ones here. One for us in California to watch is that now that a lot of miners are no longer buying computing equipment with chips in them to do the proof of work type calculations and puzzle solving, NVIDIA, for instance, has suffered a blow to its chip demand. And so, we, of course, here on the West Coast, being very chip-centric, as it were, in our economy, need to watch that going forward. It'll probably even out in the medium term, but near term, that is a bit of a slump there for us.
Yeah, a lot to watch right there. Well, Dr. Olaf Groth at UC Berkeley's Haas School of Business, thank you for joining us. Always some good information there.
My pleasure. See you in 2 weeks. Thank you.
Thank you, sir.